All right, guys, so pretty aggressive move over the past 24 hours. I hope everybody's okay, but we did tap into some key liquidity for BTC and ETH. So can we expect a bounce from here? We'll cover that in a bit. And if we don't, where can we expect price to find a bottom lower? I'm going to discuss that also. So the premise of today is I'm going to really cover the high time frame levels for BTC and ETH, where we can sort of look for high time frame swings. I'm also going to cover lower time frame stuff for intraday trading, so we can all keep busy while we wait for those levels. Stick around to the end of the stream because I'm going to cover my key alt setup and strategy that I use to catch runners like ZK and Zen, which have pumped quite a bit over the past 24 hours. And I'm going to show you how you can get in early on those things before they run. So before I do that, please like and subscribe to the channel, and let's jump into it. All right, so first up, BTC on the weekly. We've been discussing the weekly trend for many videos now, but I'll just go back once again. If you're new here, joining first time on my channel, you can see the respect for the weekly trend price has had on BTC since flipping it back in 2023. Every retest has been bullish. Yes, we've traded inside it. Yes, we've had wicks below it. We've never had a body close below it. That's the important thing here. So we are now trading into that level. I have said before, this is my high time frame barometer line in the sand for where I think the cycle will be lost due to this major trend. But why I don't think there's any cause for concern yet. So I've just drawn the old range high over here at 108K. I have been discussing this level quite a bit. Now you can see with this level, we have had 7 attempts to close below it on the weekly. We have not done it. The week is obviously still young. We only had the weekly open yesterday, so I wouldn't pay any attention to this candle right now. But all we're looking for on this is just a weekly close back above that 108.4K level. You also see down here, I have marked this 98K low. So effectively for me, this was technically the market structure break here. Have we broken it yet? No, we haven't. So it was this low here at 107.250. You can see all the wicks have gotten below it. We haven't actually had to close through it yet. You can see this is a developing weekly candle, so we can't pay any attention until next Sunday night when it closes. But until then, this is effectively a market structure shift on the way up. So if we do lose this level, you can consider this a weekly market structure break. But I actually like the 98K low more. You can also use this for another market structure break from a swing perspective, I should say. But the reason I really like this level is the confluence that offers with VWAP. So I discussed just before when I was doing the intro that I was looking for high time frame spot and swing position levels. Now these are basically based on the weekly noodle here and the 98K low. So there is a potential we come down and run this low and close back above inside the noodle on the weekly. So maybe the noodle bottoms out like that, we get that wick below, we close back inside it. This would be very bullish. You can wait for the confirmation on closing back inside on the weekly to pick up positions if we do that, if you're long bias. Otherwise you can, see where alts are sitting, see where BTC is sitting. Like when we get down here in price, you will have a lot of opportunities on things. So I think if we get down there, a lot of alts are going to look very, very bad, but they might come into very nice levels if you're a value investor and looking to pick stuff up on the cheap. So flipping over to VWAP here, this is yearly VWAP. Now you can see the importance of that 98K low over here. If I just drag it across, you can see in here my sort of buy zone for BTC and where I'm interested in it is between these two lows. So we'll just mark out the most recent low. This was the 1010 liquidation wick, 10th of October, the biggest liquidation event in history. Now you can see that lines up very nicely with the developing yearly VWAP here. So that's around 101 to 100K. This is, my first port of call. We start getting down there. So I'm going to start hunting swing entries. Now you can also see just below it, that 98K low I marked out lines up with the 365-day rolling VWAP. Now 365-day rolling VWAP is a very important time frame for this. So actually get rid of the VWAP for a sec and zoom out. You can see it's just like the weekly money noodle, the weekly trend I was just sharing. Every retest we've had of this, since 27th of February 2023, they've all been bullish retests, bought up, and they've led to a new shift higher in the cycle. So you can see the importance of this level, and that's why I'm really looking for this zone down here at 101K down to 98K for swing positions. And I think you guys should all mark out these lows. You don't need VWAP, you don't need the noodle, you don't need the trend. You can actually just mark out these two lows here. So this one is at 101.5. I am on the Binance spot chart here, so it may vary depending on what chart you're using. And the next one is down at 98. Let's just say 98K flat. So very important zone. You could draw a little box in there. This is effectively where you're just looking to pick up positions if we get down there, because the invalidation is very simple. We start losing that 365-day rolling VWAP. We start losing that 98K low. We start losing the weekly noodle, the weekly trend. Then I think, to me, the cycle has pretty much topped and we're looking for lower prices. So we start getting below that, cannot get back inside it. We start consolidating, accepting under it. I'll be looking to ride shorts down possibly down into this 74K low here, which I have marked out in the previous stream. Because we just marked this out quickly. This is the old range high and low. So you can see this is the range, and effective that happens, I'll be classing this here as a big deviation. And then we get back inside and we trade back inside the range. We'll look for the range rotation down to the other side. All right, so onto BTC from a more local perspective. So I have just drawn, I'll just get rid of this for a sec. We have just run this pocket of equal lows down here. So 106K, I've been talking about this a bit on Twitter, quite a bit in the Miles High Club if you're in there. If you're not and you want to join, the link is in the description. You can get access to all these indicators I'm using as well as all my education and market outlooks. But what I've been discussing is looking for a run of these equal lows and then targeting potentially these equal highs up here. Now, once again, this is just, you can treat this as a range. But all I wanted to see with this was a sweep under and a reclaim back inside. We're not out of the woods yet, and we'll pull up the volume profile in a sec. But I just think for now, this is good enough to hazard a long opportunity and probably just target like a quicker play, probably up into this supply level here. I think we actually have the rolling VWAP lining up with that on the 7-day, give or take. Yeah, you can see you have the 7-day rolling VWAP there too. So that'd just be like a sort of intraday play. This is a 4-hour chart, so maybe, goes over a couple of days, depends how aggressively it moves. Do also have this inefficiency, this gap to fill here. If I pull the volume profile from just after the 10-10 liquidation wick, from left to right, now this is showing the volume of transactions for this entire range, where the most volume occurred. So basically these two lines here and the more highlighted region shows with it's called the value area, right? So it shows where 70% of total transactions occurred. So it was basically in these two areas. Now you can see the dashed line in the middle. This is actually the POC. So this is the single point where the most transactions occurred. Now you can see on the other night when we came up and ran into the POC, I was actually looking for a sweep just above this into the FVG here on the daily. That's where I was going to trigger a short down into the value area low. You can see it just flat rejected at the POC and sold off. So obviously, this range is very respected, and this is, you don't have to draw range highs and lows like I do. You can actually just trade on volume, just dragging this thing across. And this is a free tool you can get in the projection tab of TradingView. You just go down to volume base, you've got anchored VWAP there, which you've seen me use before. We've got fixed range volume profile, but you just draw it across and this basically shows your range. Now, so we actually just mark out the importance of this. You can see this deviation below. Once we reclaimed back inside, nice retest of the low there, came up, rejected at the POC, came back down, retested the low, the value area low, shot straight up, value area high, rejected back down, value area low, swept under it, reclaimed, came back up, some rejection at the POC, flipped it into support, rotated back up, deviation of the value area high, back inside, bearish retest right here, came down back under the POC, we gave it a bearish retest, we came down, we traded back under for a deviation, left these equal lows here, which are a liquidity target, came back up, pushed into the POC, rejected, pushed into the POC, rejected again, and now we're back down under the value area. So you can see it's a very, very good tool to use if you're just trading sort of rotations within this range. So right now I am looking for, I was looking for a sweep of these equal lows. Now what I'm looking for from here is to get back inside the value area. So if it doesn't and we start to lose these equal lows, obviously the next port of call is going to be down at these 103.4K lows. Obviously if we start losing that, then we can target that 101K 10-10 liquidation wick, which is also in line with the yearly developing VWAP and a bit lower as the 365-day rolling VWAP and that 98K low. So you can see sort of my plan here. Intraday right now, I'm looking for a reclaim back inside the value area. So the low right now is at 107.5. Back inside here, and we look for that rotation up. You can almost target the POC again if you want, or you could take some profit at the supply here, even at the body. So that would roughly be, first TP would be 109.5, maybe up into 110, maybe even up into 111.2, give or take. Now we start flipping above the POC. Obviously we have a very clean target. We can target the value area high, which is roughly at 113.5. So that's my intraday idea. Now if we start to lose that, we have our targets lower based on the high time frame the high time frame levels I was giving you. So that's a fairly simple play right now. That's all I'm looking for. You can also see when we came into this level down here, we formed a pretty nice H1 divergence. So very strong H1 RSI divergence. We had a nice bounce off that. We came up, but you can see we immediately rejected off that value area low. So it's quite crucial right now to get back above this point, 107.5, and then we can target those higher prices. Onto Ethereum, it's a similar case here. So we had those equal lows. We actually swept all of them. We actually had equal lows here too. So these were the equal lows. You can see we front ran it here, pushed up again, came back down, closed under it. We also have this key swing low over here at 3,640. Now, I'm just going to get rid of this equal low for a sec because we're trading under it. I think this swing low right now is quite important. So what we're looking for here, we also have equal highs to target at 42.60 if we do push back up. I'm neither a bear nor a bull here. This is just a range, so I'm just trading it like a range until proven otherwise. We know our high time frame levels if the trend shifts and the trend gets lost. So, you know, while we're not losing that trend, I'm not really being a bull or a bear. I'm just trading the levels that are in front of us. I think this is a very clean range on the 4-hour chart. I don't think you really need to trade much else on the 4-hour in here right now. So what I'm looking for here, I'm looking for this to be a deviation, and that would be confirmed by us getting back inside and back above this key swing low over here. Now get back inside, some acceptance there, maybe some sort of nice retest, maybe a low time frame trigger like the M15. We'll cover what that is in a bit with the new strategy I'm going to show you. And then once again, we have the supply up here, the point of breakdown. That sits roughly at 38.50, give or take. So it can also pull the value area from here. I'll just get rid of all this for a sec. We can pull the value area just after the liquidation wick. Now we can see once again, pretty clean, right? We can see how many times this range low has been respected. Deviation here, got back inside. Now you can see we're quite away from it. So that's why ETH isn't as attractive to me right now. You can also see like on the daily chart for ETH BTC, obviously BTC is the better asset to play right now. The daily trend is just capping Ethereum. We'll discuss more on that in a sec. But you know, we did sweep that key low. So all I want to see is to get back above this, and maybe we can treat this as a deviation. Maybe we can take like an intraday play up until the value area low, just like a low time frame trigger, maybe like a 30-minute, 15-minute, 1 hour, whatever you play. We start to get above that, and we can target the POC again because it lines up with this 4-hour supply in here, which I just marked out. All right, ETH BTC quickly. Now I said at the beginning of the stream, I wasn't going to cover alts, and the reason's pretty clear here. I just don't think alts, apart from the random outliers we're seeing, are going to have a general lift until, you know, ETH starts outperforming. We can see right now ETH is not outperforming by any stretch. It's just being capped by the daily trend. We also had sort of this structural level over here. So this is basically like an SR flip type thing. We had this low form, we deviated under it, we came up, we tested the support multiple times, we got squeezed between the daily trend and that level, and then we've now lost it. So this doesn't look good to me, and I just don't think until ETH shows some strength and ETH BTC, the ETH ratio chart outperforms, we're just not going to see that lift in altcoins. So maybe if we start getting back above here, we start to flip the daily trend into support. That's where you can look to scale into alts, maybe get a nice retest on that, and that's where you can scale in slowly and look to sort of ride the trend up as it goes. But I think we're quite away from that. So right now I'm just interested in BTC and maybe Ethereum. But I think, you know, no trade is a trade, right? You don't always have to be in a trade. You don't need to keep looking for altcoin trades when altcoins don't look good. I think you can either trade BTC or you can just sit on your hands. You know, capital preservation is a trade in itself. If you're not losing money, you're doing better than most of the market. Now, even though I said just then I'm not trading alts, I have been teaching a strategy I've been teaching for a long time in the Mars High Club, but I've been reiterating it a bit for people who are still interested in trading them. It's a very simple 2-part strategy, just using the money noodle and key POIs and a time frame matrix. And I'm going to teach it to you very quickly now so you can get an insight into what we teach in the group. So you can see right here, we've had a very nice move on ZK and also Zen over the past 24 hours. We're just going to do ZK for starters. So you can see right here, we had this 4-hour demand print. We came up, we had a rounded retest of it, which also lined it up with the H4 trend. So this to me is an interesting thing. I never take longs or shorts straight into the trend. I need to see a key POI around it. So a demand, an FVG, a supply level, whatever. Some lows run. I just need to see something else to give it confluence. So you can see right here, we came down, we tested both of those points, but where do you get an entry on this? Well, I'm glad you asked. So what I like to do is have this thing called a time frame matrix. And basically that is, if I'm on the daily time frame and I see a daily POI, like just pretend this is a daily time frame, just pretend this is a daily demand. If I saw this daily demand rated, I would want to go to the hourly and find an entry trigger for that. Now, if I was on the 4-hour, I'd look for an entry trigger on the 15-minute, and if I'm on the 1 hour, I look for an entry trigger on the 5-minute. So that's kind of the time frame matrix I use, just those 3 time frames. But for this one, it was a 4-hour demand level and the 4-hour noodle. So what do? I go down to the 15-minute. So all you're looking for there, we know the 4-hour noodle's just been tagged. We're simply looking for the M15 noodle, the 15-minute noodle, to get flipped. All I look for, you can see since we broke down on the 15-minute, like the 15-minute was very respected on the retest on the run up. And you can see on the breakdown, every retest, once we flipped under it, has been a bearish retest. So we know there's respect for this level, which is a good sign. So anyway, we have the 4-hour demand retest in line with the 4-hour noodle. So simply we're looking for that M15 noodle flip. Now this is pretty much the first entry it gave. We got back above it. Now you would have looked at this move and thought, I've just missed this massive impulse, I've missed the long. No, you simply wait for the 15-minute trend to get retested. So it gave you an entry here, it gave you an entry again. So this is what's known as a risk entry, this first one. It's kind of hinting that the reversal of the trend might be happening. A lot of people will long the first reversal, a lot of people wait for the confirmation entry. So the confirmation entry is the high that was printed, you're looking for a market structure break above it. Now when you get the market structure break above it, you look for that retrace back down to the M15 Noodle. And this is what's known as your confirmation entry for continuation. This is a confirmation of the reversal. So, even if you longed right here, this would give you a quite nice setup. So this would have been roughly, if you had long into the Noodle, let's just say a 12% move. I'm not going to count this because it went under it. And it's as simple as that, right? So you can actually see a good example on Zen as well. And I go more into the different entries here too. So right here, I know it gets a bit messy with these text boxes. You can see this 4-hour FVG down here. You can also see we are in the 4-hour money noodle. So we have the confluence of those two things. Now, if I go down to the 15-minute time frame, you can see on low time frame what was happening here. So this was the low that was sort of put in. We actually swept it as like an SFP into that 4-hour FVG. Now, do you take a long immediately? No, you wait for that M15 reclaim. So you can see here, once we swept into that 4-hour money noodle, the 4-hour FVG, we got back above the M15 noodle, and this is your risk entry right here. So this is your first sort of inkling that you might get the trend reversal and you can take a long there. If you want to be slightly more conservative, you can wait for that push up, that break in market structure. The break in market structure was right here. Got the break on this candle. Now you can wait for it to basically come down and test the M15 noodle. We can also see we had a bunch of stacked lows in here. They were swept. So we swept those lows into the noodle, into this FEG that was formed. But you don't need to even worry about that. You can just say, look, I'm looking for the 2 POIs on the 4-hour, and then I'm looking for the M15 to target. So this is your confirmation and continuation entry, and you could have very well taken a long here as well, and you can see the result from those two things is just been trending up the M15 noodle. So very simple strategy. Go back and rewatch this. Feel free to hit me up on Twitter if you want more clarification on that. Also, if you want more in-depth explanations of it and one-to-one feedback, you can join the Miles High Club. The link is in the description below. And other than that, I'm going to leave it there. Thank you for joining, and I'll chat to you guys in a few days. Cheers.